Jimmy, your hedge funds are relatively unconstrained. You can invest in just about anything, anywhere. So what are you investing in? What's attractive and why?
So you did my speech for me there with invest in anything, anywhere. That's really the philosophy of the multi-strategy investing that we do. We have 5 big asset classes and 3 big geographies, and we go out and try to find the best ideas. Today, and maybe to some people's disappointment, I can't point to any specific area that has an obvious dislocation.
What about strategies then? Because you can do long-short equity, you can do corporate credit, you can do structured credit, you can do convertible ARB, merger ARB, the list goes on.
I'd say right now about 40% of the capital in the fund is in global credit, so that's corporate and structured credit. Next up is probably merger ARB in terms of directional risk. Convertible and derivative arbitrage we can always do and always do. And then fundamental equities, one of which we had spoken about earlier today. We're always pretty active. And I'd say today within fundamental equities, primarily US and Asia. And Asia really means China. We're not finding a ton to do in Europe right now.
Now, are you, speaking of China, do you have any concerns? Are you buying China A shares? Are you buying on the Hang Seng Index? And if you're buying on Hang Seng, are you at all worried about what's going on in Hong Kong?
So right now it's a bit of A and a bit of H. I think the Hong Kong issues obviously are important, but probably temporary. At some point that will be resolved. I think the bigger overhang on a lot of the China opportunities, actually the Chinese economy, and really the biggest overhang on that is really the US-China trade relations, which I don't think I can predict the next tweet. I don't know if anyone has done that particularly well, but at some point that'll be resolved as well. I think it's in everyone's interest to make a deal. There'll be plenty of politics and plenty of theatrics between now and then, but eventually that'll get resolved.
So you're 40% in credit. By anyone's measure, we're approaching the end of the credit cycle, and there are signs that maybe we're there already, right? Auto sales are weakening, freight shipments are down, earnings, estimates are being revised down. There's an uptick in loan loss provisions. What, if anything, causes this cycle to turn?
It's probably that same issue of a recession. There's a lot of talk and there's a lot of ink being spilled right now about the fact that we're late cycle, about the fact that credit spreads are relatively tight and yields are relatively low. All of that's true, and all of that will change at some point with a recession. I think when we talk about credit, it's not in the traditional sense of we buy a bond at par with a 5% coupon and we own it because we want to earn 5%. That part of the credit market, largely unattractive. From time to time there's an opportunity and we step into it, but at this stage in the cycle, that's not the focus. Within credit, we may own a bond or a loan or a claim of some kind, but the investment we're making is really more about a process, a restructuring, a liquidation, a litigation, some sort of complex situation that usually happens idiosyncratically that just so happens to be a credit instrument.
You mentioned that you do fundamental long-short equity. It has, relative to the performance of the equity market, at least the US equity market, been a challenged business for quite a long time. What is the future of long-short equity in your view? Is there really alpha to be captured there? We
evolved our model several years ago, largely because we had those same concerns. I think the old-fashioned model of equity long-short, which is have a large team of people looking at a large set of companies with a long list of longs and a long list of shorts and try to grind out that alpha, that's harder to do now with technology, with regulation, with the democratization of information. So we look at an edge as the ability to make long-term investments, the ability to endure significant volatility, and the ability to be totally unconstrained. So do I think you can go out today, buy 300 stocks, sell 300 stocks, and have there be excess return between the two? I think that's tough. But do I think you can sit back and say, let's wait for a dislocation in China or in growth or in this factor and find 10, 20, 30 ideas you can hold for multiple years? We think that works quite well.
You are in the multi-strategy world. Your master funds have done well this year, at least through the second quarter, the public data on that. You did relatively well in 2018, held up well through the bloodbath of the fourth quarter. But your shareholders will have noticed that not as much money is flowing into those master funds as they would like. What's that going to take?
So I think some of that is certain either cyclical or secular factors facing the industry, and we're gonna be up against that just like everybody else, and it'll come and go with time. Some of that, and you mentioned earlier the new name, some of that is obviously some challenges we've had as a company, and we think what that requires is really just the passage of time. And the fact is we had a challenging regulatory matter, we solved it. We had a challenging corporate governance matter, we solved it. We think we've solved our problems. We added a new name just to cap it off, and with the passage of time and doing a great job for our investors, we think that ought to take care of itself.
So now that that's in place, do you think that the multi-strategy money that might otherwise, say, go to a Citadel or a Millennium, and they're closed, should be going to you?
We certainly hope so, and it's certainly what we're doing with our own capital. Only time will tell, and really our goal is to be evaluated on the basis of our return stream, our risk stream, our fee structure, our transparency. We want to be evaluated on the merits. And we think on the merits, we've done a great job. We understand it's been challenging for certain allocators to invest with us over the last few years, and we are relieved, thankful, and proud to be done with that phase.